And we move on to investor insights. I can't. Just wow. Men live longer because we do less stupid things after we marry the right partner. Thank you for that, Simon.
And that's why it's important to marry the right person.
Yes, thank you.
That's an asset.
What do we have this week in Investor Insights?
So today I want to speak a little bit about something we alluded to last week, investing with debt. So going out and actually applying for an actual loan so that you can buy a stock portfolio.
Yeah.
Is that something that we should be looking at? Should financial services look at that?
So this is a very, very slippery slope, and it's a very interesting conversation because it has layers to it, right? Mm-hmm. An onion, right? Layers. Lots of layers. But at the very base layer is understanding that debt is risk. Right? Now, there's a saying that the cost of debt will always be cheaper than the cost of equity, which basically means your own 100 Rand, you could probably do better with by borrowing 100 Rand from a third party, paying a small interest premium and putting your 100 Rand into something else. But what we're looking at here is investing or going out and taking out a loan and using that loan to facilitate investments. Your first basic problem there is your repayment. Only ever look at this if you can afford to cover that repayment in your current standard. Regardless of what happens.
So even if it shoots up, you should be able to cover
sunk
it.
Cost.
Yeah.
If you're borrowing 100,000 Rand and they're saying that the cost of 100,000 Rand for you on a monthly basis is going to be 2,000 Rand, arbitrary number. You have to have that 2,000 Rand at all times.
Yeah.
No matter what. That's your first tick box. Your next tick box, and this is probably the equally as important as the first one, whatever you're going to do with your 100,000 Rand needs to return you more than what you borrowed. Otherwise, it's a pointless exercise. Because if I'm paying 17% on 100,000 Rand loan, and I'm using that 100,000 Rand loan to generate 12%. Every year I'm out of pocket 5%. It makes no sense. The whole point of investment is appreciation, not depreciation.
But I would put a third tick box then, which is careful what you buy, because the obvious one is now Jimmy has told you to go, so you go and buy the potash David was talking about, and it goes the other way. You actually want to almost go to a lower risk space. The problem we've got right now is in the high interest rate environment. In a lower interest rate environment, maybe it works. But of course, interest rates can also change. But there's a fun thing here, securities-backed loans. So the brokers start to do this, which is the other way around.
Yes.
So you've already got shares. So your 100,000 Rand, you're not borrowing. You've got 100,000 Rand of shares. And your broker will lend you 20 or 30,000 to go and buy some others. So you're a little leveraged up. Your 100's now 130. But I mean, your first point is absolutely spot on. If you borrow that money, you have to come whatever, Armageddon, you have to be able to make that monthly payment on the loan. Otherwise, you are now in the dwang like you can't believe.
So it's different if you're borrowing money to finance something for a limited period of time, right? This is the other thing, the time component of it. If I'm borrowing 100,000 Rand to finance a project or a development that Simon and I know will return X amount in 36 months or whatever, we've got a finite window on that 36 months. You can measure that return.
So it's time-based.
And you can do those calculations, right?
Yeah.
But if you're going to go borrow to be open-ended into Sasol until whenever, you also don't really, you know what I mean? So it is something that can be a strategic advantage. And I say strategic advantage because I'll give you a couple of examples. Simon's touched on one with the collateralization of your portfolio, right? It's very beneficial to be able to go into, you've got a 10 million Rand equity portfolio that's sitting with Investec or whoever it's sitting with, and you say to them, guys, I've got 10 million Rand, give me a collateral backed loan of 60%. The bank will never give you 100% backed loan because they're managing their risk. So they're saying, okay, of the 10 million, we'll give you 6 million as a loan. You're still liable. You're still on the hook for the 6 million, but they know, much like a government bailout, they know that if you default on the 6 million, they're going to sell 6 million of your stock at whatever price to recover their money. And that's the important thing there is you've got no control over that. Once you sign that over, you're saying, guys, here are my shares. If I fail, you guys do whatever until you recover the money, right? But they'll collateralize the entire 10 million, not just the 6, because they know they can get a worse off price.
And let's be clear, I've worked at a stockbroker where I've had the instruction of that portfolio sell it.
Liquidate.
I'm like, what price? They're like, sell it.
Anything.
I'm like, but the amount I'm going to get for it is less than they owe you. Don't care. Turn it into cash. So now not only have you lost your money, you now still owe the bank money. And this was back
so you still owe the difference.
You owe the,
Yes.
And they are, I mean, and, you know, it's like, you know, we could wait today and, you know, just like make it cash. We want it. Don't care.
That's it. So when you're looking at this from an investment point of view, it's very important to understand why you want this particular loan, why you want this particular financing, what kind of project it's going to go into. A lot of people will then say, look, again, there are strategic benefits, right? The benefits are that if I have an opportunity right now, there's an opportunity to go in on a very undervalued stock or a very undervalued company, and we're delisting the company, we're buying the company out or whatever it is. We've measured how much we're going to return, but I just don't have the liquidity.
Yeah.
It's a good thing. I can go to the bank and say, hey, give me some liquidity against this asset, because that portfolio is then an asset for them. And that's the one side of it. But there's a whole separate side of it where you don't have an asset to put up as collateral.
Which means you're going unsecured.
Which means it's unsecured. You're going in and saying, I want to borrow for the purposes of investing. What are you investing in? If you're investing in property, that could be a benefit. I've seen, I actually have a good friend who went out, got a loan and bought a rental unit, put it out for rent.
What kind of loan? An actual home loan or?
An actual home loan, but then collateralized that first property to fund the second, and then the third, and then the fourth.
Yeah.
And so he's not liquid enough to cover all of those, but he understands that every single month, when that monthly premium is due, there is enough to cover that premium. And using debt to finance investments, when as Simon rightly said, when it's low risk and you understand what you're doing, then it's okay. But the first thing I said when we started this conversation, it's a slippery slope.
And then it comes to the question, Nicolette. So let's use Jimmy's example, where I'm going to pay 2,000 Rand a month back for this debt.
Yes.
Why don't I just invest 2,000 Rand a month? Start slow.
Is my return?
And I remember when I was 20 odd years old and I went to the bank and tried to borrow money and they wanted to know why. And I said I wanted to buy shares in a tech company.
Yeah.
And they were like, dude, you're still in matric. I'm like, yeah, but like, I know what. Yeah. Anyway, they turned me down. But so what I then did was I just every month put some money aside, and it took me a year and I'd saved up some cash. And I know FOMO, we're in a hurry to get rich, places to go and things to do. But it was the low risk route.
Yeah. And it actually also does add up. I think a lot of people think that it's like that 3-year degree. You have a conversation. Do I actually want to go and do a degree? And someone's like, just go and do it. And then 3 years later, you didn't do it and you're sitting there kicking yourself. And I think it's the 100%. Same thing with finance. Let's move to the next one, which is quite an interesting one. We are coming into Women's Month in August. That is like literally a week away. And I want to put a gender lens on retirement. I'm finding that women are living longer. So when we all get to retirement, say you and I both get to retirement, we both have saved R1 million. What I get for my R1 million and what you get looks different. And simply because I'm going to live longer. Surely then we should be taking it a couple years back and helping women restructure how much they contribute to retirement correctly.
So let's be clear. I mean, the whole retirement industry, when it started, would have said, what's woman?
Yes, of course. Patriarchy and all was built.
And then one day, the retirement industry was like, oh,
it's a whole market.
But then you're 100% correct. And there's lots to it. So women typically start later.
Yeah.
They typically save less because they have more pressure.
Yes.
Let's not even go down the road of single mothers. Who
and salary disparity?
We can pause now because you're getting the message across.
There's a lot,
but we're not even scratching the surface yet.
Yeah.
And then you're 100% correct. Then you come to retirement and you think, finally, rid of patriarchy. And the retirement industry is like, we saw you coming. There should be. From a pure numbers game, women are going to live longer. That has implications. It means even if you're not in an insurance product, if it's a living annuity or something like that, your drawdown rate has to be smaller. So there's no. looking at the gender in terms of the policies that are being sold, and I think in many cases also in terms of the advice that's been given. It's kind of viewed of, are you going to live for X years? Well, no, it depends if you're male and female, and those numbers are different, and they are markedly different. Yeah. Easily 5 or 10 years extra life expectancy for a woman. So, I mean, the one tongue in cheek is women should marry very young men.
No, well, what will that do for them?
So what it means is they die at the same time.
Oh, wow. So instead of fixing the numbers, just rather fix this number.
Fix this situation.
No, because you're 100% right. I mean, I thought about it before, and I haven't come with this. I don't know what the solution is.
Yeah. And I guess also when you enter into a corporate world and they sit you down with HR to discuss which retirement, which band you are going into, it's almost a default, right? And a lot of people don't have that conversation to say, well, I'm a woman, I'm this age. Everybody just kind of goes into the default, that the whole company has gone into, never really goes to see HR until you resign or move on to the next job.
Last week, you and I spoke about the two-pot system and how not contributing over the long term has an issue, right? To bring it into this conversation, we've kind of skimmed over this, but there are females that take breaks to become parents.
Yes,
in that time when you've decided to take an unpaid break or an extended break, you are now no longer contributing towards those things. Now that in itself has a detrimental impact on what you achieve at the end of it as an outcome of what you've raised, despite the fact that you already have that sort of disadvantage where you start from in terms of salary disparity and all of those things.
You earned this. You took time off.
So taking time off as well. And now you have these conditions all compounding. And unfortunately, when they compound, I mean, if we take a woman who does earn a lower basic, does take the break, does tick all of these things in their roadmap of life, you could find that by the time they retire, they significantly or they earn significantly less than what they would have or than their male counterpart. And that's a serious problem.
And then a corporate kicks a woman out 5 years earlier for retirement, which gives
60, not 65, right?
Which gives her even less. Now, not all corporates. Some of them are getting quite woke on this, but most corporates are putting retiring women earlier, which again steals time.
And as we've established, in retirement, time is everything, right?
Let's look at the wall. I want to go overseas first today. And I don't know, there's something that says to me, let's talk Tesla.
Okay.
I've been seeing Elon commenting quite a lot on the Donald Trump shooting and attempted assassination.
So you say commenting a lot. Elon Musk has actually confirmed he will be contributing $40 million
so what?
a month
and this
to ensure that Donald Trump gets elected.
And we have the receipts, which also his earlier tweet, which says...
Per month, $40 million US.
And what's the justification for that?
He believes in Donald Trump.
No, but that can't be all.
This man is so polite. He believes in Nazis.
That's worse.
The right-wing MAGA in America really do think that Joe Biden and the Democrats are coming for their I don't know what, and there is craziness to it. But Tesla's an interesting beast because, I mean, the chart's actually doing quite well. But there is certainly his antics are turning off some buyers. Your typical EV buyer would be, initially in the early days, was a left-leaning Democrat, right? Wants to save the world, cares about the environment and that sort of thing. But there's also just the sense of you're a first market mover, you got 100% of the market. They're now down to about 50%. And that's just what happens. Unfortunately, Elon Musk is something else.
You're still technically the largest player in the market. You're still the front runner. So that whole first mover advantage will still serve you well. I mean, if you think about a Microsoft, for example, you think about an Apple, for example, if you are the first or the leader in certain spheres, it's very difficult for someone to come and unseat you. But this is another interesting stat, and I've given this out as a separate stock pick on a different show at a different time. Warren Buffett and Berkshire Hathaway. Warren Buffett, arguably one of the best investors in history from a long-term perspective. He's backing BYD. He's not backing Tesla. And BYD, that's my alternative for you.
It's cheaper, it's Chinese, and it stands for Build Your Dream.
So Tesla You didn't actually say whether it's a go or not.
That's true. We didn't actually say whether it's a buy or not.
So, I mean, the chart is looking good, but no.
No. Instead, you're buying BYD.
If there's an alternative. No. Maybe we should add that to our wall. Maybe we should add a section for alternatives where there might be a more affordable alternative. We'll look at that.
Okay.
Yeah.
I want to talk Anglo Gold Ashanti.
Yes. Let's talk about it. So for 20 years, the only time I bought a gold share was when I closed a short.
Yes.
You
said that.
That's how it works, right? And then this weird thing happened, pandemic. And suddenly I found myself owning gold, physical gold or an ETF, and Anglo Gold Ashanti. These things, so the gold price trading at all-time highs this week. It's pulled back a little bit. My target of 2,500 for this year is just a walk in the park. It's a small little hop from where we are at the moment.
I think we hit 2,480. I'll pull the numbers
exactly, 86 or something. I don't know what the next target is because it's the moon. The gold price is not going away. We're in a higher for longer inflation environment. There are phobias and fears out there. Central bankers are buying gold instead of dollars because they saw what happened to the Russian dollar reserves. And so goes the story. And in which case, you need to own a gold mine. Now, I was actually chatting with Meryl Pick from OMIG this morning, and she likes Harmony, partly because of the gold, but they've also potentially got some copper assets. Anyway, Anglo Gold Ashanti, love it, hold it, wish I had more.
Wish I had more. That's
there we go.
Here's an interesting one. I mean, I'm only asking just to hear your sentiments on what is actually happening. Sasfin.
Can't buy it.
Yeah.
They're going to delist. No point.
So anybody who's currently holding it, what does that mean for them?
You'll get bought out. There'll be an offer that'll be made. It'll be made at a certain price. You will have the option to accept the offer or not. If enough people accept the offer, it will be forced upon you to then accept. The company will delist. It will cease to exist on the exchange, and you'll get cashed out.
And do be careful. So the offer's 30 Rand a share.
Yes.
So it's currently trading at 27 time value of money because it's going to take time for the deal to happen. Sasfin might say to you, you can take shares in an unlisted Sasfin. Don't do that.
Right.
Don't do that because you've got no liquidity. You can't buy and sell. You can, but it's immense. The beauty of the JSE is that I could, while I'm talking here, sell my entire share portfolio, have the money on Monday, and be on my way to a hideout in Zimbabwe. Because no one would look for me in Zimbabwe.
That's a very interesting hideout.
But your unlisted shares, you could spend the rest of your life trying to sell them.
And this is the other thing with the Sasfin deal is they are looking at almost a partial delisting.
Yeah.
And that you can't really do, right? So from a JSE perspective, there's a whole list of problems that come with that. But either way, it would have been lovely to have. But if you didn't get in when did Uncle David say it listed? 1987. If you didn't get in back then, it's delisting now. Ship has sailed.
All right. And the last one, I want to bring back Pick n Pay. And what are your current
Did we not just do an entire thing on the rights issue last week and Sean Summers? And look, if you have the option to take up the rights, then good for you because you're getting them at a much more reduced price to where the share price is. Share price is back at 22 Rand, having hit 28 Rand this week as well, ahead of the shares. The rights started trading on the 17th, so about 2 days ago. Anything in this 20 Rand range, I still think is worth a buy. At the end of the day, they still have the footprint. They still have everything else. Even if worst case scenario, Sean doesn't implement the management turnaround that he wants to, or the business has to sell off half of whatever it has. At 20 Rand a share, your upside versus your downside, for me, I think they survived their worst, and at their worst, we got as low as 16 Rand. So if you're buying at 20 Rand or even 22 Rand, it's a 6 Rand difference down to where their absolute worst was. And the market then said at 16 Rand that they believe that the stock is still worth something, right? So for me,
and the current 20 odd bucks is 2008 price levels. I concur. I think there's more chance of Sean doing a lot of good. He might not get it all right, but he'll do a lot of good. And he's not going to break it more, put it that way.
That's it. He wasn't brought in to break it more, and breaking it more doesn't incentivize him to get paid either, right?
Yeah, absolutely.
But a lot of that money is just like, as long as you come to office every so often,
you get your money. You get that portion of it.
Yeah.
All right, so we'll cap it there at our wall. So Pick n Pay is still staying on the wall. Just don't know where it's ranked on our wall, but it will stay there.
You know what? I think we should have it sit as a load up. I still think people should be loading up on it.
Yeah.
I don't yet think it's worthy of blue chip status, but it definitely load up if you have the opportunity to, and see how that works out for you. I mean, at the end of the day, the things that we say here are our thoughts and our opinions. You know the disclaimers. This is not investment advice. Please don't come back to us and say we've given you investment advice when we haven't.
Man. And I hear people asking me about my investment firm. I'm like, guys, please, these are opinions.
Yeah. We have conversations.
Any of us are sliding into your DMs on the social. It's not us.
It's not us. Speaking of socials, we are on our social pages, our X community pages. We've got our YouTube channel up. We've got our TikTok channel up. We are on our socials, and we do post our conversations there, but we do not slide into other people's DMs. No. We do not. We also only follow the three of us. If there's an account that follows you that has our names that isn't one of us, it's not us.
I want to tell you what I want to speak about next week.
Okay.
As we're holding our breaks, the 19th of September for the next MPC rate decision.
Okay.
That's what I want to talk about, because I feel like South Africans are under pressure. We're not understanding this inflation adjustment, inflation management. We all think we're waiting for the US to make a decision and South Africa will then follow suit. We need to explain that to people.
Cool. So Uncle David's coming back to talk about that banking premium. Until next time, investing isn't hard. Just try it.